What is going on, YouTube? Welcome back to the channel. I'm super happy to be back here. It's been a few weeks since I made a video, but I've been really busy working on some stuff behind the scenes, one of which I'd like to announce here if you haven't already heard about it. I am hosting Prop Firm Match TV, which is a completely free live stream that is on the Prop Firm Match YouTube channel. I'll put a link in the description of this video, but it's been an awesome experience. We're about 2 weeks in, and basically what I've been doing is just trading live, going over my trading setups, interacting with the chat and answering questions. And one of the coolest things is I get to interview other successful traders. So we've had awesome guests every single day. It's just been so fun, man. So please, if you do enjoy my technical analysis and you kind of want to get into my mind on how I execute these trades, what I'm thinking in real time, you have the opportunity now. Just tune in to Prop Firm Match TV Monday through Friday, 8 a.m. to 12 p.m. Eastern. I will be there every single day for 4 hours live streaming and going over my setups. On top of that, I'm still streaming on ASFX TV as well. So I'm trading the PM kill zone there, 1 p.m. Eastern. And man, it's just been, I'll admit, it's a lot of live streaming, but I love what I do. So I'm going to be taking these trades regardless during these hours, so might as well just have the camera on, interact with people live, and go over the setups. You know, it's cool. I love live streaming because it holds me accountable, you know, keeps me out of trouble from doing stupid stuff because I know I have an audience, and it's just been so fun, man. So kind of what's going to go into with this video is the fact that I just took another $10,000 payout with Tradeify. If you guys have been following me for a while, you know that Tradeify is my top prop firm when it comes to instant funding. So I want to go over everything. I want to go over my win rate, my average R multiple, and you know, the setups that I took to achieve another 10K payout with Tradeify. This is payout number 7 with me, just with this firm alone. You know, I'm still taking payouts with other prop firms as well, but we're going to focus completely on this run that I had with Tradeify. Also, last thing, guys, before I get into the stats and the technical analysis, if you want to support this channel, if you appreciate getting this free education, you know, every few weeks or so, all I ask is that if you are purchasing a prop firm challenge or an instant funded account, use code ZARB, Z-A-R-B. That'll get you the best discount possible on most of your favorite prop firms. And all that does is it supports me, supports the channel, and gives me the ability to put out this content for free, you know, on a regular basis. So that's it. I don't want to make the intro too long. Let's just get into the stats, the win rate, and then of course we'll get into some technical analysis. All right, guys. So before we get into the stats here, I of course want to show payout proof. You know, if your favorite guru is not showing proof of payouts or personal account withdrawals, whatever the case is, you should always be a little skeptical. All right, so here's my payout history. This is just for Tradeify since July. And since July, I've withdrawn about $42,000, and that's just from Tradeify alone. Okay, I'm still trading with other firms as well, but in this video, we're just going to focus on this Tradeify payout because this is my most recent payout. So the most recent payout came in on October 22nd. You can see right here. This was on 5 of the 50K Lightning funded accounts, and I took $2,000 out for each account, and I was trading 5 of them. So $10,000 payout. If we get to the trading journal right here, we'll go over the stats. So my total P&L is about $15,700. Average win versus my average loss is about 1-to-1. My average win is just a little bit bigger than my average loss. And with a 70% win rate, that's really nice. You know, if I can keep my stats around there, I'm golden. I'm cooking on payouts. You know what I mean? So profit factor 2.6. And here's my trade journal. So I actually did not have a single red day on these accounts until this Friday. And this is after I took the payout, right? So my last winning day before the payout was here on the 22nd that I requested. So we had a really good run. And again, I took all of these trades, or the big bulk of them, on Prop Firm Match TV and ASFX TV. So I'm taking all of my trades live, guys. I really can't hide what I'm doing. You see everything. You get into my mind. You see my setups, kind of how I go about dealing with losing trades, with winning trades. I go over everything. So here are the stats. And I think the key on this last run was just limiting the amount of trades I'm taking. So I know this looks like a lot of trades. Like it says on Thursday, I took 25 trades. But you got to remember that's accounting for all 5 accounts. So when it says I took 25 trades on Thursday, what that really means is that I took 5 trades. So I had 5 executions total. where I hit the buy and the sell button, right? On Friday, I only took 3 trades. The most amount of trades I took on a single day since I started these accounts was right here last Friday, or the Friday before last Friday. And that was 30 trades, which again, that means I took 6 trades maximum. That's a lot of trades for me. So I think that's a big part of staying consistent is if you do lock in a quality base hit, you take 1 or 2 base hits in the morning, dude, get off the desk. You do not need to trade PM session. And if you really do want to keep trading PM session, even after you have some winning trades, move over to a different account, risk sync. I am never trading all of my accounts together. So the way I like to do it is I have these 5 Tradeify accounts. I'll copy trade those, right? Because I do want to maximize my payouts on each firm. But if I have other accounts with another firm, I'm not copying them all together. There's nothing wrong with doing it, but for me, I like to risk sync. So, if I take a red day on one set of accounts, I could move over to another set of accounts and maybe have a green day. And then it just feels like it wasn't as much of a failure, even though a red day is not a failure by any means if you followed your system. But you guys get what I'm saying, right? Psychologically, it's a little bit easier to handle that. And you're also spreading out your risk. So I highly recommend risk syncing if you are someone that's trading multiple accounts. But yeah, I mean, these are my stats on the Tradeify accounts. Nothing crazy. Like, again, guys, I'm not going for 7R home run trades, right? I'm locking in base hits. These are small winning trades. $186 per trade is my average win. But again, I'm trading 50K accounts. I only needed to make a $3,000 profit target to get my 10K payout. So I don't need to make $1,000 a day or $2,000 a day in these accounts. I'm copy trading 5 of them. A $200 winning trade is a $1,000 winning trade when you add up all the profits from the accounts. So I really think just like stepping back, and if you're copy trading, try to look at it like you're just trading one account. When I take a win and I'm copy trading it to 5 accounts, I'm not doing all that math. I'm just saying, cool, I took a little base hit. I'm going to come back tomorrow, try and do it again. That's really been the key for me, limiting my executions, keeping my R multiple around 1 to 1. Sometimes I even go for 0.8 to 1, 0.5 to 1, but I'm able to keep my win rate fairly high, right? A 71% win rate is a solid win rate for me with my average R multiple. So that's the stats. Now I do want to get into like what I think were some of the best trades that I took. And again, all these trades I take on stream, so you can catch me doing that live. It's not like I'm doing all of this in hindsight. But anyway, let's get into the charts now and go over some setups. All right, guys, so before we get into some actual trade setups, I want to go over a trading checklist. I think this is a really good idea for you guys to write this down just so that you can have a clear framework to follow when you're, building out a hypothesis for a trade setup. So at the end of the day, the more confluences that we can stack together when building out a trade idea, the higher probability the trade's going to be, right? So I have 4 things on this checklist, and I think being able to grade your setups from A, B, or C is a really good way to be able to build out risk and know if you should take a trade or not, right? So if we go over this trading checklist right here, step 1, you want to follow the higher time frame trend. Again, that doesn't mean you can't look for reversals or that we are only trend following traders. But the idea is if we're day traders, if we're trading futures and entering on the 5-minute and the 1-minute time frame, right? We can easily follow the higher time frame trend and then look for reversal setups on a lower time frame. That's kind of the idea here. We're staying within the order flow of the higher time frame and then capitalizing on it by exploiting the lower time frames. So step 1, for 5-minute entries, you want to stick to the hourly trend, right? So if we're in an hourly uptrend, you're going to have an easier time looking for longs when entering on the 5-minute time frame. For 1-minute entries, you want to at least stick to the 15-minute trend. So same idea. If you're in a 15-minute uptrend, you're going to have an easier time with 1-minute long entries than, instead trying to fade that 15-minute trend and go short. Step number 2, volume profile. If we are above the previous day's point of control, we want to stick to longs. If we are below the previous day's point of control, we want to stick to shorts, right? Golden rule. Number 3, key levels. We want to frame our ideas around key levels. These key levels can be higher time frame fair value gaps, so 4-hour, 1-hour, or 15-minute fair value gaps, and or the previous day's volume profile levels, that being the previous day's value area high, value area low, and point of control. So what I mean by frame our ideas around these is we want to look for the rejections, the bounces, or bearish rejections off of one of these key levels. And then last but not least, step number 4, our entries. We're going to be using an inversion fair value gap for the entry, or you can look for a simple retest into a regular fair value gap. So again, for a long entry, we would be looking for a bullish inversion fair value gap, which would mean we're invalidating a bullish gap, obviously. And for a regular fair value gap entry, let's just say for the bullish case, we'd be looking for a retest into a bullish lower time frame fair value gap. I'll go over that in the trade setups, but this is your checklist. And again, if you can follow at least have 3 out of 4 of these every time you take a trade, you're going to be on the right side of the market more often than not. I think a good way of grading it is if you have all 4 of these checklists in your trade setup, you have an A+ setup. You can grade that as an A+ setup. If you have 3 out of 4 of these options in your checklist, then it's probably a B+ setup. And again, if you only have 2 out of 4, it's probably a C setup, and I highly recommend just not taking it, okay? A setups and B setups are what you want to stick to. If you're trying to trade a C setup, you're really just trying to force a trade, and we all know how that goes when you try and force entries. So that's our checklist. Write it down, screenshot it, but if you follow this, it'll give you a really clear framework to keep you on the right side of the market. So let's go into some setups, and we will go over what we see in our checklist and what makes it either an A setup or a B setup. All right, guys, so let's get into example number 1 right here. We're going to be looking at a trade that I took on October 15th on Wednesday during the New York session. Quick thing, if you guys have been following me for a while, when I do these technical analysis videos, if you notice, I don't need to look for like picture perfect trade setups that occurred 6 months ago. All right. My concepts work and they work well. So I can look at the most recent price action and frame out ideas and show you guys trades that I actually took. All right. I'm only going to be going over trades that I actually took to achieve the $10,000 payout this month from Tradeify. So just want to add that caveat. We're only looking at recent price action on trades that I personally have taken. So number 1, if we refer back to our checklist, what's step number 1? We want to be in line with the higher time frame order flow. Okay, so this entry we're going over was a 1-minute entry, meaning I want to stay in line with the 15-minute trend. So if we just analyze this market structure right here, this is October 15th. We're going to go over the price action that occurs here. So what is this market structure telling us? Well, at this point in time, the market is making lower highs, lower lows, lower highs, lower lows. Right here, we put in a higher high and we get a market structure shift, okay? Why is this a market structure shift right here? Because this is the last lower high that made a new lower low, and it gets taken out to the upside. So this is our shift in structure, and once we get that shift in structure, we begin to make higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, right? So we're in line with the 15-minute trend to the upside. So step number 1 in our checklist, we want to identify that we are in a 15-minute uptrend. So cool. Step number 1, we already are beginning to frame out that it might be easier to take longs, right? That's what the checklist does for us. It creates a framework for us to follow. So, okay, what's step number 2? Well, we want to look for longs if we're above the previous day's point of control, right? We want to look for shorts if we're below the previous day's point of control. Golden rule. Right here at market open at 9:30 a.m. Eastern, we are currently above the previous day's point of control, right? Previous day's POC is right here. So this is going to be our line in the sand. Now, we have 2 pieces of our checklist that are really important favoring longs. Okay, so this is how we stack confluence in our favor to give us high probability setups. So step 1, we're in line with the 15-minute trend to the upside. Step number 2, we are currently trading above the previous day's point of control. So cool. Let's go down to the 1 minute now. What's step number 3? We need to be rejecting from a key level. What are some of our key levels? Higher time frame fair value gaps, so 4 hour, 1 hour, and 15-minute fair value gaps, and or previous day's volume profile levels. So value area high, value area low, point of control of the previous day. So right here, we are coming back into that previous day's point of control. But I'm not looking for longs yet, right? I'm not going to look for a long until we start rejecting and engage a key level. The nearest key level we have is the previous day's point of control. So even when the market rips up here and we get a nice little bullish pop, I'm not looking for longs yet, right? We have no displacement to the upside. On top of that, we're not rejecting from a key level. So if I was to take a long, let's say right here, because the market started to bounce, my stop would go below the most recent structure, right? I'd be targeting 1-to-1, or, I haven't even identified a target yet, but this trade would fail, okay? Because it's only 2 out of 4 things are checked on our checklist so far. That's a C setup. We don't take C setups. We want at least 3 out of the 4 pieces of our checklist marked off. So right here, this is a C setup, technically. That's not something I want to be involved in, I want nothing to do with C setups. So let's play out some more of this price action. This is where you're playing a waiting game. You got to be patient for your trade setup to actually present. So we get another bullish pop. Again, am I going long here? No, we're not rejecting from any key level yet. We have not engaged the point of control at all. And what do? We immediately sell back off once again because we have no displacement to the upside and we're not rejecting from a key level. Finally, right here, what do? We engage our previous day's point of control. So now this area, this zone, is going to act as my line in the sand, and it's also going to act as my key level. Can we get a bounce from here? And remember, last thing we need is an entry signal. So we could either take an inversion or we could look for a regular fair value gap retest. But first thing, we need to see some displacement. Okay, we need to see the market actually react in our direction from this key level. So let's play out this price action. So this is what we're looking for, right? This is displacement. This is what we want to see. Why is this displacement? Because number one, we created a fair value gap, okay? So the market has now showed us that there are aggressive buyers coming in. So let's just summarize real quick. We know we're in line with the 15-minute order flow. We're in a 15-minute uptrend. Number two, we are above the previous day's point of control, so golden rule. Number three, we are also bouncing from the previous day's point of control. So we're bouncing from a key level. Last thing we need is displacement, and we need an inversion or a regular fair value gap to look for an entry. So we have a regular fair value gap right here, a bullish fair value gap. We also have a potential inversion, right? So right here is the next potential inversion fair value gap that can present. So we have 2 options. Either the market retests this fair value gap and we get long in here. This would give us more optimal risk reward, right? Because we can get in on a pullback and our stop can go below this recent structure. So we can either look for this, and what can we target? Well, we have previous day's high. So that's a clear draw on liquidity. Or we're going to look for the inversion, right? And the inversion would look something like this. We get that closure above, maybe a slight retest, and then we look for previous day's high. So this will give you less optimal risk reward than looking for that retest of the fair value gap, but this is a valid entry as well, okay? Now, how do you choose which one to pick? In this situation, we're just going to look for the first one that presents. So if we get the retest, cool, I take that. If we get the inversion, cool, I take that. So let's just play this out. So market grinding higher, and boom. Okay, so we got our inversion, right? We got a strong 1-minute candle closure above the fair value gap. So this fair value gap has been inverted. This is our entry right here. You have 2 options for an entry. You either enter on the close of the 1-minute candle. This is the more aggressive entry style. Now, what's good about that is you're going to get more entries, okay? You're not going to miss your trade because you're getting in right as the candle closes. Or you could set a limit order inside the inverted fair value gap and look for a retest, okay? either entry is perfectly fine. You're going to get a little bit better risk reward looking for that retest. The only thing is that sometimes you're not going to get filled. Okay, so again, that's a judgment call. I think if you're a little newer, you can just get in on the candle closure. Okay, there's nothing wrong with that. In my case, I took the retest. So I got in, I set a limit order on top of the inverted gap, and I looked to get an entry on a retest. So what are you looking for as a target? Like we said, we have previous day's high. Now, this will net you 0.5R. There is absolutely nothing wrong with that, okay? I target 0.5R trades all the time. And in this case, this is what I targeted, 0.5R. But can you also look for 1R? Absolutely. Absolutely you can. But ideally, you want to have a clear draw on liquidity when you do this, if it's this far away. And again, you want to lock in winning trades. So a negative risk reward model will net you a higher win rate, but the key is that you take A+ setups. So again, this is an A+ setup. We have everything on our checklist in line with the higher time frame trend. We are above the previous day's point of control, so golden rule, looking for longs in that case. We are rejecting from a key level, the previous day's point of control again. We're getting displacement, we're creating fair value gaps, and we're getting an inversion. So that's our entry. So let's just play this out. Let's look at the example for 0.5R first. So that would be right here, previous day's high. Get your retest and straight to target, right? Could you have gotten 1-to-1? You would have got your 1-to-1. So that is the first example. Again, just really clear setup. I took this one live on stream. And yeah, let's just get into another example, guys. All right, guys, let's get into our last example right here on the charts. We're going to be using a 5-minute entry signal. So step number one, what is step number one? We want to be in line with the higher time frame order flow. Okay, so we're on the hourly time frame right here. If we just zoom out, we are very clearly, you guys, in an hourly uptrend, okay? Market has been insanely bullish. We've been printing all-time highs like every other day. We're very clearly in an hourly uptrend, right? So let's go down to the 5-minute, or the 15-minute first, excuse me. This is our overnight session right here. So we have our Asia and our London session. We're really just in a tight consolidation when it comes to the 15-minute time frame. But we are leaning a little bit more bullish, even on the 15-minute, because we're beginning to print higher highs and higher lows, right? So step number one, check. We are in line with the higher time frame trend if we're looking for longs, because we're in an hourly uptrend. But of course, that is just one step of the checklist, okay? That doesn't make us want to get long automatically. This is why we build a framework, because we want to stack confluences in our favor. One confluence is not a trade setup, okay? If we have 4 confluences we're looking for, we want to see at least 3 of those checked off to give us a high probability trade idea. So what is step number 2? Previous day's point of control. We're going to use the previous day's point of control as our line in the sand, right? Golden rule. If we're above the previous day's point of control, we lean with a long bias. If we're below the previous day's point of control, we're going to lean into a short bias. For the time being, the market is currently trading above the previous day's point of control. So now, again, we're stacking confluences in our favor, just like the previous setup example. Number 1, we're in line with the higher time frame order flow to the upside. Number 2, that coincides with us trading above the previous day's point of control. So we now have 2 confluences telling us that it will be easier to look for longs today in the New York session than it would be to look for shorts, right? Again, do we take a trade with 2 confluences out of the 4? No. That would be a C setup. We don't take C setups. We take A setups and B setups. We need at least 1 more confluence to give us a high probability trade. So step number 3, key level. We want to see price reject, bounce or reject from a key level. Key levels being a higher time frame fair value gap, so 4-hour, 1-hour, or 15-minute fair value gap. We could see the market reject from one of those, or we can use our volume profile levels. So again, in this example, it happens to be that we're going to be rejecting from the previous day's point of control again. I'm not trying to favor that. We're just getting a lot of clean setups where we bounce from the previous day's point of control in the New York session. It just is what it is. Sometimes you'll see more, rejections off key levels from like the higher time frame fair value gaps. Other points, depending on the market regime, you're going to see more bounces from your volume profile levels or a mix of both. In this example, it just happens to be the previous day's point of control again. So, okay, step number 3, we want to see price reject from a key level. So right here, the market is beginning to reject from the previous day's point of control, right? So right here, it is 8:55 a.m. We don't take trades until post 9:30 a.m. Eastern after the New York Open. So we just got to play out this price action and wait for the market to open. So right here, this is 9:20. Let's print 2 more candles, 9:25, and boom. So this is the 9:30 open candle. Just insanely bullish candle, right? Really overextended. But listen, when the market is printing all-time highs every other day, this is how the market's going to move a lot of the time. Let's just go over our checklist once more before we go over the entry, right? Because the last thing we need is the entry signal. Number 1, we're in line with the higher time frame trend. We are within hourly time frame bullish order flow. Number 2, we are comfortably trading above the previous day's point of control. Again, this level is acting as our line in the sand, our overall bullish zone. As long as we hold above it, we want to stick to a long bias. So right there, we have 2 confluences stacking together. Confluence number 3, we want to be rejecting from a key level. In this example, again, it happens to be that we're rejecting from the previous day's point of control. And now before you say, hey, Zach, we didn't touch the previous day's point of control exactly. At that point, I'm just going to be like, guys, the market is never perfect. All right. This overall zone is what we're looking for. I understand that maybe we missed the previous day's point of control by like a tick. Doesn't really matter. All right. We're rejecting from our key level, this overall zone being around the previous day's point of control. This is where some nuance comes into play. All right. This is close enough for me. So we're rejecting from a key level. That's step number 3. The last thing we need is an entry signal. So again, we have either a fair value gap retest. So in this case, if we're looking for longs, we can look for a retest into a bullish fair value gap, or we can look for an inversion. And there are 2 of these. We have 2 entries, and they kind of get you the exact same price. So right here, we have a bullish fair value gap. You have one right here. You also have one right below you, okay? So 2 bullish fair value gaps. This is where if you're somebody that likes to get into limit orders, you could have a limit order here, guys. Like you could do this. Set a limit order here, stop loss below recent structure. You could even put it a couple ticks below the previous day's point of control just for good measure. In this situation, you would get filled to the tick, and what do you look for? 0.5R or 1-to-1, okay? But listen, a lot of you guys are still learning the way that I trade. You're learning how to trade inversions. Let's be realistic and say you waited for the inversion, okay? Where's the nearest inversion? It happens right at the open. And this is the thing, guys. When the market is this bullish, you're going to have trades like this. This is what intraday traders have to get good at. You have to be able to think and react quickly. We got an inversion right at the New York Open. I mean, right here, there's an inversion fair value gap. You have to already be looking at everything before the market opens. I want you to be looking at that checklist and checking off what confluences you have to determine your directional bias and how you're going to get into that trade. Before the open, you should know that we are in line with the higher time frame trend to the upside. You should know that we're comfortably trading above the previous day's point of control utilizing the golden rule. You should know that we are rejecting from the key level being the previous day's point of control. So even though this happens quick, it's not an excuse to miss the trade. All right, you should be ready for this. You should have your levels marked out and already begin to formulate a plan, at least 15 minutes, 30 minutes before the open. That's what I do. And I think that's what most successful people do. They don't roll out of bed and, in 2 minutes start taking trades before they have their levels marked off and an idea that they're looking for. So, all right, here's your inversion. Now, you could get into this trade. It seems a little crazy because this is a very bullish candle, but this is a valid entry. You get long on the inversion. Okay, so this is the inversion. Where could your stop go? Honestly, you do not need your stop loss to be all the way down here at this point. All right, guys, you can do it, but you could put your stop here. All right, you don't want to see the market go back below the fair value gap that we just inversed here with such strength. That would just mean that the idea is invalidated. All right. So again, could you put your stop all the way here? Yes. I really think it's unnecessary. Now, what do we have for targets? Okay. You have a clear imbalance right here. This imbalance price action from this move, clear imbalance. You also have the previous day's value area high right here. So what does the market do in regards to the volume profile levels? We react at the previous day's point of control. If we get a bounce, we often will rotate back up to the previous day's value area high. These levels not only act as clear support and resistance, but they act as targets because they are magnets for price, because they are where the most of the volume has occurred in the previous day. The market is attracted to moving back towards where there is volume. So you could have your target here at previous day's value area high. That would get you a 1-to-1. And let's just play this out. Very clear target, very clear entry. Now, let's say you did want your stop all the way down here. I mean, fine. If you want to be extra safe, could you get 0.5 up towards the value area high? Yes, you can. Could you get 1-to-1 with this wide stop? Yes, you can. Again, we have clear imbalances up here, and the market is just in a crazy bullish trend. We're printing new all-time highs every other day. So when you have all of these things stacked in your favor to the upside, you take those longs. Again, let's just summarize this price action. Checklist, hourly uptrend. We are in line with the bullish order flow. Check. Number 2, we're above the previous day's point of control. Golden rule, we're going to look for longs. 2 strong confluences right off the bat. Number 3, are we rejecting from a key level? Yes, we're rejecting from the previous day's point of control. Last step, number 4, fair value gap. Do we have an inversion? Do we have a retest into a bullish fair value gap? Yes, to both. We have both. Here's your inversion, entry, stop loss goes below recent structure or below the 930 open, below this inverted gap. Either one is valid, and you target the value area high, or you target a 1-to-1, 1-to-1.5. You look for more of this imbalance to get taken. Again, I'm not going to give you guys every single thing you need to do. You need to have some nuance, but this framework will keep you on the right side of the market more often than not. That's all I'm trying to do here. Help give you guys a framework and some guidelines to follow so that you can begin to take the trades that make sense to you. If you stay in line with these 4 things on this checklist, you will have the right side of the market more times than not. And again, that's my goal here with these videos on this YouTube channel. I don't want to make this video too long, so I'm going to leave it at that. But please, guys, remember, if you have any questions, I try my best to answer every comment possible. Shoot me with some comments. Like the video, subscribe to the channel. It means so much to me. You have no idea. I just am so grateful that people appreciate my technical analysis and want to hear how I view the market. So yeah, guys, that's how I achieved another $10,000 payout with Tradeify, just utilizing some simple guidelines to follow and then picking my spot and not over trading, getting my entry, getting in, getting out, taking my base hit, coming back tomorrow. That's really the gist of it. So I hope you guys learned something. I will be back with some new videos as soon as possible. And in the meantime, I am streaming every single day, Monday through Friday on Prop Firm Match TV. I'll put a link in the description of this video so you guys can go ahead and check that out. And of course, I'm on ASFX TV in the PM session. And yeah, guys, just again, thanks so much for tuning in, and I will catch you in the next one. Peace.